Bitcoin has broken through the 20,650 major bullish trigger level, resulting in a strong rally toward the downward sloping resistance slightly above 22,000. This all occurred on the backbone of the Federal Reserve announcement that they're going to be bailing out all deposits from SVB Bank. We're here to discuss that today as well as the price action, so let's go ahead and jump in. Okay guys, what is going on? Welcome back to the channel. Thank you for tuning into another video. Bitcoin has been moving quite a fair bit overnight, guys. We've seen a strong rally past the 22,650 trigger level, which is represented by this green line over here, resulting in a strong move towards our next resistance, sitting at that downward descending trend line. This was discussed in yesterday's video, and we did say while we're at support on a higher time frame, we do have to consider support is support until it is not. However, guys, we're not in the clear yet, as it looks like, at least right now, Bitcoin is testing that downward sloping resistance and could potentially fake out. We're here to discuss the short-term price action, the macro price action, the economic data, the overall traditional markets and market data, and of course, the recent news from the Federal Reserve in regards to securing and refunding deposits from SVB Bank and how that's influencing the asset prices right now. So before we get into it, smash the like button, hit that comment button, subscribe to the channel for daily videos on Bitcoin. We discuss everything from price action, technical analysis, structural analysis, economic data, news, and more, guys. You can also find us on Telegram. If you're interested in joining our Telegram channel, that will be that second link down below. You'll get updates on news events that are relevant to the market. You'll get charts, you'll get analysis, you'll get all of our videos, updates, news releases, and so much more. If you're interested in joining our VIP channel, you can find all information here. You'll get access to our main VIP group and our exclusive group chat. All the trading records can be found here since February 2021, and of course the membership information in that same message. Let's go ahead and jump into the video, starting off with the market data. How are we looking currently? Going to the month of March, we are down 3.67%, seeing about a 10% rally overnight after our 20,650 breakout, and on the back burner of that bullish news, or that good news for the markets that we did get from the Federal Reserve. We'll discuss that a little bit more later today in a lot more detail as we approach CPI and FOMC tomorrow and in about a week from now. Okay, so hang on to that thought. Looking at the 24-hour volume, we are up 39%, so almost 40%, pushing 100 billion, and 24-hour liquidations have mooned to 210 million in liquidations, up 92%. Absolutely insane there, guys. A lot of short liquidations in the last day, in the last specifically 24 hours here. You can see those shorts are really making up the majority of these liquidations, and we are starting to see some longs push through in liquidations, as we have seen the long to short ratio massively flip in favor of these longs while Bitcoin is at resistance. So there's a chance we're going to get a long squeeze over here and the price is going to pull back, and that is kind of what we're expecting, at least in the short term. We'll delve into that a little bit more in a moment when we get up to it. Looking at the volatility, 2.74 on a 60 and 3.08 on the 30. Massive jump there of volatility. Obviously, the price has been moving a lot now, so we are starting to see that volatility rise upwards. Let's get into the traditional markets. The DXY is mooning toward the downside, guys. It is dropping and dropping and dropping. And of course, this is not a good sign, guys, and there's a reason to that. As we've said already, we did get an announcement from the Treasury Secretary Janet Yellen, obviously Jerome Powell being the Federal Reserve Chairman, and they talked about basically the situation that's going on in relation to SVB, so that's Silicon Valley Bank, in relation to customers' deposits being made whole. And they basically said that they're going to be insuring even the uninsured money, and if you don't know already, banks usually insure around $250,000 per depositor per bank under the FDIC, but they did announce they're going to be insuring even uninsured money. So basically all amounts can be insured now, or at least made whole from SVB based on what they've been saying here. And of course, that massively devalues the dollar, guys. And that is why we're seeing the dollar drop, and that is why we're seeing asset prices rally. And again, we'll get into that more maybe in another video when it becomes more relevant. I do want to point out that the third bank has actually collapsed, and this is going to be Signature Bank in New York. This one has now officially also collapsed as the stock price has tanked. So 3 banks in 10 days. Expect more to come this week, guys. If you are in America, definitely keep your eyes on this. It wouldn't hurt to go ahead and withdraw a little bit of cash on the side, especially if you're not in one of the bigger banks there. Maybe you're in a smaller bank, a lower confidence bank. Get some money, open a few different accounts. Make sure you are prepared for this, because again, if your money gets stuck in limbo, there's no saying how long it's going to take you to get that back, particularly if you have over 250,000. So let's go ahead and get back into it, guys. We have seen the DXY drop. We've seen stock markets rally as a consequence. Sorry, we did see that bounce at 32,000. Right, our first target on the breakdown from symmetrical wedge was going to be 33. Our next target 32, perfectly reached both of those. Now it looks like we're seeing some sort of bounce on the back burner of that news, and of course the DXY falling. S&P 500 looks like we have retested that downward sloping trend line. This is our bear market, okay? This is our expanding, broadening wedge, our decreasing, expanding, broadening wedge. We have retested that trend line now. It looks like we've printed a green candle as of right now. Hanging on to that. If we do lose this low, we are going lower. Until then, if we do break above, we are going to have to reclaim 4,000 again before we see any sort of move upwards. Before we get bullish again, we need to reclaim 4,100 before we see any sort of swing higher. We are kind of stuck between a rock and a hard place right now. A lot of indecision still in the market, guys. There's still a lot of indecision. And this indecision is going to carry forward until CPI, which is tomorrow in about 32 hours away. And of course, FOMC, which is in 10 days time. Looking at bond yields have absolutely nuked it. And again, bank stocks have dropped, bond yields are dropping. Banks just don't have your money right now. And this is because, again, we are seeing the DXY drop. We have seen bond yields drop, and bond yields are a leading indicator for the DXY, and it is not looking good. If bond yields keep going down, we can expect the US dollar to continue downwards. However, I will point out we are coming up to support right now. This diagonal is a support. 4.35 is going to be a support for bond yields. Keep your eyes on that going forward. Let's go ahead and get into Bitcoin, because guys, there is so much to discuss. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. Currently, Bitcoin has pushed upwards and has broken out of our downtrend, right? Our downward trending diagonal resistance, which is going to be represented by this black downward trending trend line. This is our downtrend. This is our downtrend that we've been in ever since we rejected and formed that top over here at 25,000. We have been in that downtrend now since the 21st of Feb, and it is now the 13th of March. So a little bit under 20 days, we have been in this downtrend now. And again, we have just bounced and retested that downtrend, attempting a possible breakout. That breakout was initiated from a trigger upon the break of 20,650, which, if you remember from yesterday's video, you will know that was the neckline for this deviation at support. We said that a breakdown from this uptrending support line will result in a continuation downwards. We did not see that. We got the break above 20,650 first. Therefore, the directional move was going to be upward to retest the downward sloping resistance. Congratulations. if you paid attention to the video and you caught that jump, and a lot of people in my group chat, VIP, caught that. Unfortunately, happened overnight for me, so it sucks I didn't get to jump on the rally, but it is what it is. Congratulations if you did. There's always more opportunities. What we are currently seeing now, we'll define everything that's going on. We are seeing a breakout slash retest of this zone on an hourly chart. If we go to a 4-hour chart, we can see currently the wick has pushed above, but the candle has not closed above. Now, since this chart here is a weekly time frame, a daily time frame, a higher time frame, we do need to use higher time frame candle closes to validate these breaks. So what we're looking for here is a 4-hour candle close above the downward trending diagonal to validate that this downward trending diagonal has been broken. Okay, there's a few different things I have to talk about today, so try to remember each individual point. A breakout validation is a 4-hour candle close above the trend line. Anything below that is going to be a potential fake out rejection. Okay, we'll discuss what validates that in a second. So a 4-hour candle close above the diagonal will confirm a breakout. What will trigger the next move upwards, and how high can we go? The next move upwards will be triggered from a break above on the hourly, this 22,600 level. As you can see, 22,600 was going to be the local top of that crunch zone. Okay, this crunch zone we had over here, this rising channel formation we had over here for about 3 or 4 days. Remember, a couple days ago, we had that massive period of indecision, manipulation, sideways price action. Well, the 22,600 level is going to be the candle high of the highest point within that formation. That is going to be the high that we need to break above to continue this trend upwards. So a visual example would be a bounce at this level, a push upwards. That is going to be the trigger for a continuation upwards. How high could we go? Well, realistically, guys, we'd be looking for a push and retest of the uptrending diagonal resistance, which is this uptrending resistance line here, and the horizontal range at 24.4 to 25.2. That is if the trend continues upwards. Structurally, if we continue toward the downside, what will validate it? Again, a 4-hour close below this trend line will be required. And more importantly, guys, we're going to have to drop below on the 4-hour chart. If we see our local low of this candle, basically, essentially, this candle is going to have to drop below the opening price over here, which will validate a rejection slash fake out, and that can extend a continuation all the way back down to potentially retest that exact same trigger point as a maximal low. Now, I do want to point out, guys, on the higher time frame, we are at support, right? We bounced from a major support level. This was our major support. If you remember from 25K, we said 25K rejection. First target was going to be their support range, 21.8 to 21.5. A loss of 21.5. Our next target was 20,000 to 20,500. A loss of 20,000. Our next target, 19,200 to 18,000. However, every single one of these areas were potential and possible bounce points, and we have looked like we have now bounced from this area. So the question is, are we going to continue up and develop and reverse this current downtrend and develop this uptrend back to this range to retest 25K, or continue downwards? And we do need to take a look at some of the shorter time frame technicals and obviously daily technicals to discuss the probabilities of a break upwards here, or a rejection, or at least discuss how the price is looking at this level, and that will tell us the probabilities of our directional moves. So let's go ahead down to a small time frame and discuss how we are looking. This is going to be, this green line corresponds with this green line. These are slightly different charts. This is Binance chart, okay? This is Bitget chart. The prices fluctuate by about $10, but this green line is the same area as this green line, 22,600 on both charts. As you can see, guys, we are hitting that level quite bang on, really. We are seeing decreasing momentum once again. So we have decreasing momentum at resistance. What does this tell you? This tells you we're seeing a bearish divergence, right? This is a bearish divergence. This indicates momentum is starting to weaken, and the trend is starting to weaken at resistance. This tells us a pullback is likely. The next question is, how low could the pullback go? Is the pullback we've already seen the end of the pullback, and are we going to bounce as support on this trend line? Those are the two scenarios now. So let's discuss. Okay, currently we have broken from the uptrending support line of the momentum into a negative. On the 1 hour, on the 15-minute chart, it looks like we have completed and validated our bearish divergence. We're going to have to move to a slightly higher time frame. On the 30-minute chart, we can still see that bearish divergence is very much present on the 30 minutes. We can see that the momentum is falling downwards. It is starting to plateau a little bit around about 22,100. Going back in history, can we see any major support sitting around 20,100? We can see a little bit of horizontal support around about this 20,200 to 20,150 level in this range. We can see Bitcoin's price is currently pinching in this level here. Therefore, we can say a loss of this green line on the 30 to 1 hour chart will confirm the next move downwards. Until then, we have come down and retested a horizontal support, okay, as well as confluence at the same point here on the 4 hour on the diagonal chart. So the horizontal and diagonal support where we are sitting currently. Therefore, the possibility for a bounce is still there. Looking for a short, we're looking for a breakdown of this level for a continuation downwards. Looking at our VRPV, how low and where will we be going? Let's go ahead and get some more range in our VRPV over here. We can see on the visible range, we can see some jumps at around 22,800. Okay, we're looking at the same ranges between that 22,000. So first target on the way down, 22,000 to 22,800. That is going to be our first target downwards. Moving down from there, we can see again over here, 21,200 is going to be a little bit of a jump. And finally, we're looking at that gap between 22,800 and obviously this this trigger level at 20,600. So to visually draw them out, we're looking at this range over here as a first target. If we drop our next target, we're looking at the range between 21,200. Okay, this is going to be sitting around about over here to just under that level, 21,000, and of course finally 22,650 to 20,800. Those are the lower levels we are looking back at for a pullback. Looking at the RSI on the 30-minute chart, guys, we still have that massive uptrend on RSI over here. If we do come down and drop below this level, this will be a higher time frame trigger or a trigger for a higher time frame continuation downwards and rejection. All in all, we are at support at this diagonal, and therefore shorts currently, right now, at the moment, are not favored to be taken. Shorts were favored to be taken over here and just under as a potential rejection before that break outwards. Shorts will be favored to be taken again once we lose that horizontal support as defined right here on that 15-minute chart over here on the 30-minute or the hourly. Shorts will be then favored to be taken. Longs will be favored to be taken if we break above and close above the 4 hour above this diagonal trend line or the hourly above 22,600. Until then, we have decreasing momentum, decreasing volume, at resistance. The potential for a drop is there, but we do not have confirmation of a breakout yet. So right now we are in no man's land. Every decision and both decisions come with equal risk, as we have not confirmed the breakout, nor have we confirmed a rejection. So definitely keep your eyes on that. Our higher targets have been given, our lower targets have been given. Let's go to the daily and break down a technical analysis, deleting everything on the chart over here on the daily just to make it a little more clear. Starting off the market cipher A, guys, let's see, we are breaking above the 50. We have wicked above the small time frame moving averages. That is a good sign, but again, the 50 is going to be acting as current daily resistance. Therefore, a loss or failure to break above the 50 on the daily will confirm a rejection continuation downwards. Considering where that 50 EMA is sitting at 22,120, that is going to be quite an important level, as if we do lose that on the daily, we would have subsequently lost it on the 4 hour, and therefore we would have rejected from that downward trend line already. So keep your eyes on that, okay? Looking at the small time moving averages, we have not quite broken above the small time moving averages yet, and the small time moving averages have not broken fully past the 50 EMA yet, again signifying the trend is not very strong right now. It is volatile, but it is not incredibly strong for an uptrend. We need to give it more time to develop. The Ichimoku cloud, we are still within the clouds and rejecting from the baseline. We have bounced from the bottom of the clouds, as we've said that was a potential to do. We have seen the lagging span remain above the clouds. We have seen the baseline and conversion line in the clouds, and the price is obviously now rejected from the baseline. Again, a key rejection point, not a very good look for Bitcoin, but we're going to have to break through this cloud to see any sort of move back up to 25k. However, while we're in the clouds, guys, particularly from breaking downwards in, we do not expect this continuation to occur. We have opened up a red cloud here. Potential for rejection here is quite likely. Potential for rejection on daily is quite likely. I would not be surprised after we saw a glimmer of weakness that we do actually pull back. However, we do have to keep in mind, a lot of this move has been massively influenced by the Fed, okay? We do have to understand, technical analysis is about 70% accurate. We have three types of things. We have the known risk, we have the unknown risk, and we have the unknown risk, okay? So at any degree, we're about 70% accurate in TA, but there's always an element of risk that can influence the price that you cannot predict and you do not know what it's going to be, such as news events, such as the Federal Reserve, such as different economic shifts or factors that can influence the price at a moment's notice without any kind of headway or announcements or data we don't know about, or data that's not available to the public. Therefore, these moves sometimes can be sporadic and quite quick, and often they don't have much data backing, or should I say justification, until after the fact, or at least while that price is moving in one direction. So although we see the price have moved up now, we do have to be aware of why it's moved up. We kind of say it's moved up because it's moved up. It has had a trigger, it has had a reason to move up. Now that reason could invert and we could come back down. We could see a reason for it to come back down. But what I'm trying to get at here is essentially, when we're coming up to news events, such as CPI, such as FOMC, such as PPI, such as all these banks collapsing, the current market environments are incredibly risky, as we have more unknown risk in the market as of current. We don't know what bank's going to collapse tomorrow. We don't know what impact that's going to have on everything else. We don't know what the Fed is going to say about it. We don't know what CPI is going to be as a consequence of all these banks collapsing. We don't know what the Fed's going to do about FOMC now because of the banks collapsing. There is more unknown risk in the market now, and it makes trading and it makes the price direction a little bit more harder to predict, a little bit more sporadic, and that is why it's really important when we do these analyses, we give you structural plans. We tell you, okay, such as yesterday, a break over 20,650 was the trigger for a continuation upwards. I can't tell you what's happening right now. I can't tell you what it's going to do in 20 seconds time, okay? But I can tell you when we break over these main structural levels and confirm highs, confirm breakouts, we will expect the probability to be in our favor for a continuation in that direction. And that is what we're doing here, guys. Let's take a look at the RSI on the daily. We've taken a look at this a fair bit already, but I want to take a look at it again because again, we have bounced. The RSI on the daily, we have seen this downtrending RSI trend line break out. Now this, or have we seen it break out? Let me zoom in a little bit. Let's just line this up. RSI on the daily, oh, we have not seen it break out yet. The RSI on the daily is at resistance. So we have had a break on the diagonal trend line structurally, but momentum has not broken out yet. So like I said before, we have not had a validated breakout. It's not a confirmed breakout, and therefore we cannot be aping into longs right now, loading shit up, getting ready for the moon, because it may not happen right now while we don't have that confirmation. Always wait for confirmation. We're not gamblers. If you're a gambler, go ahead, do what you want. If you're a trader, you wait for the most statistical and probable confirmation. You wait to be in the best statistical advantage for your trade before you take the trade, whether it's trading support, trading resistance, trading diagonals, trading volume, trading momentum, whatever it is, you use validation points to confirm your decisions, not the other way around. Let's go to the market cipher B really quickly. Market cipher B, like I said yesterday, we printed a green market cipher B. Yesterday was signified weakening bearish momentum. It signifies the first glimmer of a reversal, and we did see that in fact occur. One more thing I want to take a look at is the Gaussian channel, and then we're going to do it to a smaller time frame. Gaussian channel on the daily chart, we have seen a break down from the Gaussian channel. Like we said, guys, every time we break into it, we end up through it. We saw that. We saw into it, we end up through it. We have now pushed up to retest the midline of the channel. Again, adding even more resistance to our current resistance zone, making this resistance zone even more significant. If we break through this diagonal, we will be breaking through the midline of the Gaussian channel. We are likely to continue through and upwards to retest that 25K range. Watch the next day worth of price action. Super important stuff. A lot of this can be influenced by CPI tomorrow as well. So be very, very aware of that. Let's go to the 3-hour chart, 3-day chart. We can see Gaussian channel, huge bounce on the Gaussian channel midline over here, looking very, very good on the higher time frames. Obviously, this is a great thing to see over here on the higher time frames, are looking really, really good now. We have seen that bounce to the midline. We have seen the Gaussian channel turn green and the prices above it. Again, very good look on the 3-day chart for the Gaussian channel. As we go to high time frames are going to be looking very, very bad, like I said already in yesterday's video, as it is very lagging, but that doesn't necessarily mean that it is bad. It just means it's lagging. Again, it smooths out a lot of the data, and therefore it generally is lagging when it comes to predicting reversals. But the 3-day is looking very good over here. The 2-day is looking even better over here, guys. A huge hammer candle over here at support. And again, the daily chart, it looks like we're at that resistance point, potential point of a continuation. I'm gonna leave the video there. If you've got any questions, leave them down below. Let me know what you think, and of course, I'll see you guys tomorrow. Thanks.